Just really welcome and appreciate you joining in the Emerge event. Today's session is more focused on the business aspects, right? So AI has two aspects: uh, business implications of AI our business models in a platform economy, and as well as the technical aspects of the AI. Today's session is not covering technical aspects of the AI. Today's session is really covering the business aspects of the AI. We're going to start with everyone examining your business model. But before we get into that pieces, those of you who don't know me, who haven't met with me before, I want to introduce myself. My name is Jai Pandya. I used to be called Dr. Jai Pandya. Some people call me Dr. Jai Pandya. I do have a medical degree. I used to be a doctor back in the day, qualified health professional from India originally. I migrated to Australia in 2001, changed my career to technology. And so since, practically year 2000, so I've been in the tech industry for 24 years. For a number of years, I had a tech business in form of consulting businesses. And in 2017, I started a company called MVP Ventures. In 2018, I started a tech platform company called Master Dojo that we now call Zingify. So I now run two businesses since 2017. Before that, I have spent about 15 years running a consulting company. I have had a short stint at Google and Facebook in Silicon Valley. From my consulting days, I used to consult with Queensland government, federal government, local government, mining, financial services, done a lot of work with CBA, Suncorp. And at some point, it was like, I don't like the corporate bureaucracy. I like the cool world of technology and startups and small businesses where things can at least move fast. And that was one of the key reasons why I started MVP. Let's start with what specific goals or takeaways are you hoping to walk away with? So listen, when something is important enough, you do it even if the odds are not in your favor. And I love this quote from Elon Musk. And the reason I'm starting with this quote, we are at a cusp of almost like a new era in business. And really anything is possible. And how big is your imagination? How big is your thinking is going to shape the size and the quality of your businesses, your income, your wealth over the next 3, 5, and 10 years. It's only limited to your ambition and what's really important. And that's what I always hear about, when I get present to this quote. So I wanted to start there. And that's what you are going to be immersing with. And as a business owner, let's get into why am I starting with a business valuation? Listen, business is an asset. For each one of us, business is an asset. And just like any asset, it has to perform, right? When you build a business, you work 10, 15, 20, 25, 30, 40 years building a business. And at some point, you hope to sell it, exit it. And that's where the business valuation is important. More importantly, how the business model that you are currently operating in is shaping the value of your business. Really critical conversation for us to have. So we're going to start there. Have a look at how many years you've been slogging away in business. And slogging away might sound like a slang language, right? But it's like, there's this what it takes to build a business, get customers, keep them happy, and start thinking about what's the value of your business. Whenever you hang up your boot, when you retire, you want to exit, you want to sell, hopefully you can sell your business for certain value, right? And so it's a pertinent question to engage with. What's the value of your business? Is it going to reward you when you eventually exit? 5, 10, 15, 20 years. Hopefully it's more than just paying the bills and surviving and living life and and creating an asset, right? So it's important to ask this question: what's the value of the business? By the time it may not be necessarily important today, but by the time we exit, what is it going to be? If you need capital and you need to engage external investors, that becomes way more important question, especially in technology. What's the value of your business? Third question: what's the valuation do you want for your business? There's this value today. If you sell your business today in the market, what would a business broker or a potential buyer will say, this is the value of your business, and that's what they're willing to pay for, versus What's the valuation would you actually like for your business? Okay, so let's discover your business model. See, business is an exchange of value, and when you examine a business model, the assertion I'm making, most businesses, as you and I know, right, over last couple of 100 years, or maybe in the history or maybe more, it's a pipeline business. And so the value creation process is a sequential process in what is called a pipeline business model. Okay, let's examine what do I mean by that. You might have, when you start a business, you have an idea, right? Whether it's a service business, you have to then, from an idea, you design your service proposition. Then you have to acquire skills to deliver that business. If it's a product business, you have to actually, once you have done that product design, you have to produce, manufacture your production aspect of it. Then you have to distribute your product or services, right? And then in the end, customer receives the value in that sequential process. So it goes from idea to design to skills acquisitions or production of the products, and then distribution of the services or products, and then customer gets a value. Each of these are a kind of a sequential process, right? Which is what I call pipeline. Imagine a horizontal pipeline. Product business, you deliver products. Service businesses, you deliver services, right? That's a distribution component. So it's like goes sequentially. Idea to design, it's a skills, you learn the skills. If it's a product, you make it and then you distribute. That sequential process, one by one, creates value. And then, in exchange, they pay you money for your products or services, right? So that's a value exchange. And that's what I'm calling a pipeline business model. I did not coin that word. I'm not claiming the IP of that word. Pipeline business model, was invented by the guy called Sangeet Paul Chaudhary. He has written so much about the platform business model in a book called Platform Revolution. So if you're keen about the platform business model, highly recommend reading that book. No matter what business it is, most of our businesses are pipeline business model. At some point, we had an idea. We designed our service or product, right? Whatever that proposition is, we acquired the skills for it. And if it was a product, when I say product, this glasses can be a product. The marker is a product. I'm talking physical products, okay? You have to design it, and then you have to manufacture it, and then you have to find your distribution pathways. If you run an e-commerce website, it is still a pipeline business. The platform on which you host your online store, that's a platform business. If you have a Shopify store and you are selling fashion, accessories, clothing, those type of products, you have an online store, that is not a platform business. E-commerce store is not a platform business. E-commerce store is just a product business distributing the products via online channel. And it's distinct from what we call a platform business. And if we don't get and appreciate this distinction, then it's very easy to collapse the distinctions we want to draw, distinction we want to learn about, the stark contrast between a pipeline business and a platform business. Okay, so see, when you have a pipeline business, how is your business valued in a pipeline type of business model? It doesn't matter what industry it is. Is it a consulting and a service business? Is it a massage therapy business? Or you're making, sunglasses or marker pens? If you have a pipeline business model, what I'm going to cover next applies to you and how your business gets valued. Okay, let's look at the service businesses. In service businesses, your valuations typically rely on multiples of your EBITDA, your earnings before interest, taxes, depreciation, amortization. And for most service businesses, the valuation generally falls between 1x, 1.5x of EBITDA. Meaning, if your business generated $100,000 of net profit in a service business, okay, the value of your business can be about between 100 to 150K if you sell it. And it's really hard to get a multiple of 3 in a service business. Okay, and anything more than 3 is exceptional result in terms of your business valuation. So we want to ask ourselves a question: why do you think a service business is only valued at multiples of 1 or 1.5x? You have spent 15 years, 20 years building a service business. And at the end of it, if you made a profit of 300K, you sell it for half a mil. Imagine 15, 20 years of work, you sell your service business for half a million. Is that enough? But why are these businesses not valued highly more than what we are observing in the global benchmarks? Let's look at the product business. It's a little bit better than service business. Let's say you are manufacturing whiteboard markers, okay, or sunglasses. If you have that type of business, again, you will value that business with the multiples of your profit, but the valuation multiples typically range from 2.5x to 5x, right? So again, if you go to the same example, 100K profit in a product business, you can sell it for 250K or 500K, right? So product business distribution can be done without dependency on a specific skills. There is more leverage. There is more scalability in a product business compared to service business, right? So we want to see what are the factors that are actually, helping increasing the valuation. And all of this is a context for the business model and the AI conversation we are about to have. See, if we don't ask ourselves a question as business owners, what is it that's going to actually help my valuation of my business eventually when I exit, or if I want to engage investors to raise capital to drive the growth of the business? What are these factors that I need to pay attention to? So profitability is definitely one criteria that defines the valuation. These 7 factors is what any business valuers consider, okay, in valuing a business. Your profitability, your revenue trends. If you look at last 3 years, is your revenue increasing? Is your revenue decreasing, right? What's happening, right? What are your margins, your gross profit margins, your net profit margins? Do you end up with 1x? Do you end up with 1.25, 1.5, 2, 3, 4? Where do you end up? This factor affects that. Who are you selling to? What's your customer persona? Is your customer persona someone are they kids? Are they students? Who is your persona? Are you selling it to mining executives? Your persona, will also shape the value of your business. Okay. What's the size of the industry in which you operate? That's also the next factor. If the industry is not growing and the size of the industry is very small, the opportunity of revenue growth and the expansion remains small, and therefore the valuation of your business reduces. If your industry size is massive and growing, value of your business potential increases. Next one is strength and depth of your management team. Your leadership team, above and beyond you, are you a one-person business? So if you are out of the business, what's the value left? Your management team, business minus you is your management team. Is there a value there? Are they good? Are they experienced operators? Right? Are they great business leaders? So strength and depth of the management team also shapes the valuation of the business. And the last factor, competitive advantages, right? What's your unique selling proposition that sets the part of the business? You can take a picture of this slide. This is something that I really wish and would want every business owner to learn more about and pay attention to. And a lot of business owners just don't think about these things until it's time to sell, and then it becomes a reaction rather than proactively paying attention to these factors, as we are building our businesses, so that whenever it is time to sell, you are strong in each of these factors. Product business, so here's why the valuation multiples are lower in a service business. When you look at all those 7 factors, there is a limited scalability and leverage. Because it's a skill-based, you have to hire people. As you go bigger, you have to hire people. I run a service business. I also have a platform business. And one thing I know about service, when you hire people, more people you hire, you are scaling what? You are scaling human drama. It's great to have a large team, but your drama that you have to deal with as a founder, as an owner, also scales up, right? In a service business. So it's hard from a scalability and leverage perspective. If you're an education business, consulting business, massage therapy business, you have to find those skilled people who will deliver your services just like you would. And that's hard. Product businesses, on the other end, are scalable, have a significant leverage. There's less dependency on individual skills and expertise. And it's very easily possible for a founder or the owner to step back from daily operations. We see in McDonald's following a system, creating a burger and selling a burger, 13, 15-year-old, right? You don't need a high skills. It's a product business. That's why product business has a higher valuation. It's a simple. The question I have for you is, how do you as a founder, business owner, feel trying to grow a product business? If you run a product business, this is the question for you. You want to get connected with your experience of running, growing, building a company that is a product business. And now the question we want to start asking is, how would a business achieve 19,000x valuation? Did you know WhatsApp was acquired by Facebook, Meta, for 19,000x multiples? Meta paid $19 billion to buy WhatsApp. It's a platform company. But how the heck did WhatsApp justify 19,000x valuation when it was not even making profit, let alone? But WhatsApp's revenue was just under $1.2 million at the time when Meta bought it and paid $19 billion for it. And if we don't ask that question how and learn those factors and then try to apply those factors and replicate that in our businesses, we are criminals. I want to see platform and AI driven companies. Let me show you a bit more about the valuations. And this is recent, okay? Perplexity is raising capital at a sky high valuation, 180x. These are the AI driven companies, AI platform driven companies, and these are the valuations that they are enjoying. This is as of June 2024 reference point. 225x, 180x, Cohere 157x, OpenAI, everyone uses ChatGPT, 46x, Glean 46x. There's a company called Databricks, most people don't even know about it. Scale 20x, Anthropic AI chatbot 18x. Even in a capital constrained environment, interest rates started to go up. But how come in 2024 these AI driven companies are enjoying and raising this kind of raising capital or exit valuation at this X? If you think about it, yes, there was a time, when the cost of capital was so low, right? And what is it that is pertinent in the business model of these companies that is missing from a traditional service and product business? That's the question we have to ask. Well, number one, data is the fuel for AI, and these companies, those who has the data, are capturing value. Everyone uses ChatGPT, but in the process, how much data ChatGPT is capturing about you and your business, right? And that's where the value is getting captured. That's where the value is, that's where the inherent value, because you can do so much with that data in an AI economy. Margins. So if it's a platform company and a platform business model, the margins are quite high compared to running a traditional product or service business. Market opportunities are higher. We have seen global companies come up very fast, and it's like a winner takes a very big market share in a platform, an AI driven platform company. We have seen how quickly OpenAI became a household name. Nobody knew before November 2022 about anything about OpenAI. That was a very small section of people. And then suddenly ChatGPT is released and everyone knows about OpenAI and ChatGPT. If people don't know about OpenAI, people still don't know about ChatGPT, right? Google has been an AI company for years, but market share, ChatGPT took on the market share over Gemini. There's a high scalability global market. So there's a term called big total addressable market. TAM is if all prospective customers, if all of them bought your product or service, whatever that is via platform economy, that's your TAM. It's highly scalable. From day one, you can build a global business. They have an ability, an opportunity to expand into new verticals. Uber started as a transport, taxi, pick me up, drop me at this place. And then they entered into a whole new vertical called food delivery. And now they're delivering parcels. And they are also expanding into other verticals of boat transport, right? If I have a boat, I can put my boat on Uber, even the private airplanes, right? It's just new verticals in the same thing. I'm going to take one thing or person from point A to point B by somebody else and providing a technology infrastructure to do so and AI algorithms to do so. Platform companies, these AI driven platform companies have an ability and opportunity to expand into new verticals, leveraging the existing assets. If a product or service business wants to expand into new verticals, it really is a hard slog. It will require capital investment, new type of people. I mean, I run a tech company, software development business, that's a part of the service. But hey, I want to open a consulting business. I need to hire a different kind of people. Oh, I want to open a massage therapy business. I need to hire a different type of people, right? So it's different scalability. If you look at the capital markets, and this is useful for anyone raising capital, right, for your platform company. See, investors want above average returns in a high inflationary environment. And we have seen inflationary environment. It is no longer, if you're trying to raise capital, investors want 25, 30, 40, 50% returns. Stock markets will deliver 12 to 15%. Nasdaq, 12 to 15%, ASX 8 to 10%, your superannuation might be doing 8 to 10%. Properties give 5 to 6% in a good environment. If you have a property in Sydney, you end up with 2% yield, right? Investors want, high returns in a high inflationary environment where the currency debasement is happening. So the value of money, dollar, is going down all the time. So you need to keep up, and how do you get those high returns, right? And AI is attracting all the money. We need to pay attention to this. Like, how come? These are the factors we need to try and replicate in our businesses for us to play the game and win the game eventually. Okay? So here's the thing. AI-driven platforms. Here's something that I make as a bold statement, and I've been saying this since I did this first presentation back in 2014. I've been talking about platform economy, platform business models, artificial intelligence since 2013-14. That's almost 10 years now. I have been saying this. I for myself feel like a broken record, right? For some of these people, this could be new, but AI-driven platforms will impact, influence, and shape the future of every business. And I should underline and make the every business part bold on this slide. There is no business that is escaping this disruption. And there are really two distinct components, platforms and AI. Only AI is not going to cut it. Only platforms are going to cut it. Platform plus AI is disrupting. It's like disruption on steroids. And let's look at some examples in different verticals, in different industries, right? What are the companies that are doing this? In transport sector, I had this big debate, autonomous vehicles, right? The year was 2021, and I was speaking on a stage. I had a keynote speaker role, in Port Douglas. I was invited, and there was this another speaker before me who was also a tech speaker, and he just ranted and vented about Tesla, right? Tesla is an overrated company, blah, blah, blah. It's a car company. Why are people valuing it so much? Blah, 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 right? And then I had ended up in the debate on stage in front of 200 people. And I said, Tesla is not a car company. Tesla is actually a platform company. The autonomous vehicles, the amount of data that Tesla is collecting, the AI algorithms that Tesla has, compared to any other automaker, right, is far superior, and other automakers will not even come close to Tesla when it comes to AI capability. Imagine a scenario where you are autonomous vehicles, you don't need to drive, you don't need to pay attention. And now you have a big screen, you can be watching a movie, you could be attending a meeting, you could be, watching a Netflix show, right? Doesn't allow it right now, but that's what the platforms do. There are a lot of revenue streams that Tesla can unlock in coming years, which is what's the underlying factor into the valuations that Tesla enjoys. Navigation, AI helping navigation, obstacle avoidance, decision making in complex traffic, right? Like, and carbonics. No one knows about carbonics, but again, AI and a platform company shaping, and playing a significant role in autonomous vehicle. Traffic management, optimizing the route, reducing the congestion, improving the overall efficiency. Here's the thing that I love. The company is called Kapsch. It's got an eco-traffics platform using AI, intelligent corridor, first in the world, Nicholson Street and Carlton Street in Melbourne. That intersection, there are sensors installed on a traffic lights, cameras installed on the road. So sensors and cameras in that intersection of Nicholson Street and Carlton Street in Melbourne. That's the first trial ever in the world. Really looking at what is the traffic situation and that shaping whether police comes on, how the traffic light behaves, and how to reduce congestion. AccuSensors, those traffic cameras that are capturing our pictures. We broke red light, speed or not wearing seatbelt actually is going far more. People using mobile phones, all of that is intelligent eyes, but the workflow of law enforcement, increasing the safety of people on the road, is dramatically changing. Tesla and Disney, again, in transit entertainment, freeing up the time, from driving so I can watch Disney movie while I'm in the car or do work or whatever. That's a platform's emerging platform and AI converging into a transport sector. Dynamic pricing is another example. Uber is using, when there's high demand, the prices go up. It's designed to attract more drivers on the road, more cars on the road to service the traffic because demand is higher income potential. So surge pricing, I think we all hate it that Uber does that, but as a business, that makes Uber phenomenal strength from a valuation perspective. Now, I love to talk about it because, it's very close to my heart. Khan Academy has come up with AI-powered private virtual tutors. Harvard is actually deploying, ChatGPT types of bots to teach computer science. And then this is where I talk about my company called Zingify, because we are also in education technology space, right? We are doing so much in this space, right? YouTube. I never thought YouTube was an edtech platform. It was like a bunch of videos and people, doing whatever. But you can go and learn anything on YouTube. Wikipedia, Quora, YouTube. These are the education technology platform. Why? Because the AI technology, smart content recommendation relevant for me, what is connected to my interest. Education, consulting, professional training. We are building a platform. We are building digital twin. We have built digital twin that is always on, smart consultant, advisor, coach, trainer. I ran a consulting business for 15 years, 17 years, I should say. And every client wanted me. And if I'm not working, there is no revenue. And so I was imagining back in 2014-15, can I create an AI replica of me? And I started working on building Zingify, digital twin. And so this is an Australian, Brisbane-based company. We actually took it to America because that's where the market is. So this is my platform. We are using natural language, context-sensitive, nuance-aware AI bots to personalize advisory, coaching, and training. And now we are able to replicate a consultant or a coach into an AI. And now that AI works 24/7, servicing clients, talking to prospects, answering, members and clients' inquiries, while the coach or a consultant might be on holiday, or, there's a ceiling to how many hours a coach or a consultant or advisor or mentor could work. While we protect intellectual property, one of the key thing is, ChatGPT consultant, you train ChatGPT into your proprietary knowledge. Now ChatGPT got that knowledge. The way we are building Zingify technologies is to protect the intellectual property of educators, consultants, coaches, so that you don't lose what you created over a period of years and years of experience. It's yours. Your IP is honored. Media and entertainment. These are different industries I'm just covering as examples. AI created content is becoming a nightmare on the internet, right? You don't know what's fake, what's real. AI is now creating movies, music, images and paintings, and art is being created by AI. And Netflix, engagement, right? If I like thriller on Netflix, then it's going to give me more thriller. If I show one thumbs or two thumbs up to Netflix, now it knows. And I love to train Netflix algorithms into what I like and what I dislike. Manufacturing environment. There's a company called Bright Machines. They have actually created cobots working with humans in a factory environment. Streamlining the assembly of products and inspection process for quality assurance, producing higher quality products. Like literally every manufacturing environment, there is always an error rate, faulty products being produced on a assembly line in a manufacturing environment. The goal with AI and platforms, it can be zero. Robotic RPA, process automation. A lot of people use AI in this space, UiPath, enterprise environment. Anything that is tedious, repetitive processes are getting fully automated. UiPath, Microsoft Power Automate's doing this stuff, right? Predictive maintenance of asset, machinery. Equent, there are several others. You can actually predict the asset and equipment failures and therefore plan maintenance routines. Equent platform is doing some phenomenal work in monitoring your equipment, collecting the data, and helping spot equipment failures before it happens. So it's a predictive maintenance domain that's getting more and more stronger with AI platforms. You look at HR and recruitment space, HireVue. I love HireVue platform. Textio, identifying help most suitable candidates. You can optimize the job posting by suggesting more inclusive and compelling language. Analyze the facial and verbal cues during video interviews. Verbal cues, remote work, video interviews are very common nowadays. HireVue is playing a significant role helping employers identify good candidates over duds. Disrupting HR. You will hear about these companies, as the rate at which they are growing are phenomenal, right? You look at candidate screening, identifying passive candidates from your LinkedIn and predicting the likelihood of job switching, testing candidates for skills, automatically grading their responses. This is where, HR and recruitment is getting changed and disrupted by Intello and Vervo. And people, companies are shifting. See, we don't need to build big businesses. When I say big businesses, big in terms of number of people. Shifting from people who do things and tasks for you to people who can actually tell you and tell AI what to do. Don't hire people who will just do things for you. Hire people who will tell you what to do and tell AI what to do. It is actually becoming possible now to build a $100 million company with 10 people in the team. So what's the conclusion? If we continue to build traditional businesses based on age-old business model, we are vulnerable to the disruption and be left with no value and nothing to show for it. And it's only logical that those of us who are ambitious and want to lead must prepare to transition to the AI-driven platform business. So let's learn about the platform business model. The goal is these 7 principles is what we want to replicate in our businesses. And if you're building a platform company, if you're building a platform, you want to replicate this principle in your business model. That's the thing that we want to pay attention to. Number 1, the value exchange is enabled by the platform. Interaction between a producer and a consumer. Uber, we'll go back to Uber as an example. Producer, who is a producer? You can call a supplier. Someone who is taking the car and signed up on Uber as a driver. That's a producer, that's a supplier. And then the passenger is in a role of a consumer. What is Uber doing as a platform is doing a matchmaking, enabling that interaction. And that interaction is what is creating the value. Platform itself is not creating a value. It's enabling the interaction between the two parties. And by virtue of those interaction on the platform, the value exchange is happening. That's a key characteristic for a marketplace platforms. So this is the first characteristic. Second characteristic, more people engage with the platform, more value there is. Imagine there was 2 Uber drivers on Uber platform and 20 passengers. Now we don't have enough driver to serve the needs of all 20 passengers. But 2 drivers become 10 drivers and 10 drivers become 20 and 40 and 100 and 200 and 5,000 and then the same number of passengers. As more people are interacting on the platform, overall value is growing. More people are interacting, more people are signing up, more value that is getting created. Pay attention to not the name or the brands, but the characteristics and underlying principles that drive the value. Number 3, network effects. Specialized term that really got coined since the platform economy, and the platform economy only exists for last 20 years. It's very new in the schema of things. It is very important for the platform companies to successfully crack the network effect. If you don't crack the network effect, platform companies fail. The next characteristic, on a platform, typical user may be able to switch a role. YouTube is a video sharing platform. If I upload a video, I'm playing a role of a producer because I'm a content creator. And then we are watching a video, you are a viewer, you are a consumer of the content. But you, from being a consumer of the content, can become a content creator under your same account. And me, as a content creator, can watch other videos. And when I'm watching other videos, I'm a content consumer. So ability to switch the role is a key characteristic principle under a platform. Now, principle number 5, plug and play, third-party integration. You can bring partners to co-create value. You don't need to be the guardian and owner of the value, and this requires a lot of mindset shift. It's that principle that if you apply is going to help you drive the value higher. Next one, value is co-created. The owners of the platform don't necessarily are, attached to creating the value. They are attached to and committed to value is created. How is the value created? Not that I am the one creating the value. Okay, it's a subtle mindset shift that needs to flow through infrastructure, products, services, that we are co-creating the value for our target market. And then there are very sophisticated and a clear distinguished revenue streams that platforms exhibit. Okay, it's not one revenue streams, it's multiple revenue streams that they have, and they are possible, and they, platforms make a very deliberate choices into which revenue streams to activate at what time. They are each sophisticated revenue streams, multiple revenue streams, and a deliberate decisions on which revenue stream to activate at what point. So here's how I would summarize the 7 principles. You might want to take a picture of this slide. If you apply these 7 principles in your business, whether it's today's business or tomorrow's business that you create, it's going to help you drive higher valuations. See, this is the thing that I questioned you. How many employees would you need to support your current business, and how would that number change if you aimed at scaling by 2x, 10x, or 20x? And then as you scale, what challenges do you foresee as you scale your team? And here's the next question for you. What additional factors you must consider as your team grows and revenue increases compared to managing small team with lower revenues? Here's a simple rule. As the team grows, your complexity grows. And listen, any business, right? Effective management and support to your team members are critical for sustainable growth. I love this diagram that actually shows, how do the platform companies scaling? You are not the one creating the value. You have to enable the exchange of value via the platform. You have to connect the people so they are creating the value. You have to provide infrastructure so that people can interact and then exchange value. These are the important elements. That's the way to start to think about it in a platform economy. Here's the thing to pay attention to. Let's look at some numbers, okay? Difference between product business model, service business model, and digital platform business model. Your x-axis is your revenue. Your y-axis is your cost of goods sold. So if you look at x-axis, where it says 0, red line represents a platform company. Your revenue is 0, but your cost of goods sold, your costs are high. That's a typical characteristic of a platform. Compare that to a traditional service business. While a lot of company people get attracted to a service business, actually service business is a green line. You can start with $0. As your revenue grows, cost of services is growing, and it's growing marginally. Product business require higher capital investment, continues to grow up as your revenue grows up. The red line that started with high cost when your revenue was low, your revenue can be scaling, but your cost remains quite low. In a platform company with highest revenue potential. That's what this graph is trying to show you. Take a picture of this slide. Really important to understand the cost and revenue differences between a typical platform company, typical service company, and a typical product company. How do the platform companies scale? Right? As the revenue grows, business becomes more leveraged, more efficient. You still have cost of goods sold, so your product development, software development team, your enhancements, that's annoying when you're not making revenue. All this cost is still there, but they are increasing gradually along with your growth. And once you hit that point of product market fit, your margins start to grow. And that's why platform business models are, easier to scale. Draw a chart like this. Write down your maximum revenue, map your cost of goods and revenue, and see how they increase in last 3 years. Map this out, right? Your cost with time and your growth. Discover that insight for yourself in your profit and loss statement. And in a typical platform company, that could look very different. A platform business needs far fewer team members and employees than a traditional product or service business. A platform business's expenses plateau at some point while your customer base can keep growing. I'm committed that we start to ignite your thinking on our AI platform business models, right? But first business model and then AI. Okay, we want to merge the both. Disruption is inevitable, right? You need to make a choice. Don't be the next Kodak or Blockbuster. And if you're building technology, don't build it just for your company, but build it for the industry. Here's the picture that, I start with AI opportunities, okay? So when you look at AI and the business models, where are people applying the AI? So the top external, okay? So on the left is a front office. External facing, market facing, you can have products and services that are AI enhanced, differentiated, and there is a new value proposition created in the products and services. And then you have bottom section, which is internal in the organization. You have back office, admin, HR, legal, finance, IT, and then you have core capabilities, R&D, your distribution, and your skills. It's internal. If you look at the spectrum, the left end, everyday AI, and then game-changing AI. Using ChatGPT is what I call everyday AI. Or then there is an opportunity on this end of the spectrum, what I call game-changing AI. There's a very differentiated value proposition, and that's more in the realm of a game-changing AI. If you are investing into AI, platform technologies, platform business models, shaping your platform business model, you're investing into research and development, into skill set, into distribution capability, in a game-changing AI. From top to bottom, that's front and back office. From left to right, from everyday use of AI to game-changing AI. Very rapidly, we are moving to a point where everyone's going to be using and consuming AI. And its consumption of the AI is not going to provide competitive difference. So, choice you and I have to make is, am I going to be consumer of the AI? Am I going to be the creator of AI? So, you're going to choose your AI platform play. The questions to answer is, what is your risk and reward appetite? How do you acquire the resources to capture the opportunity for game-changing AI? And how integral is AI to your organization's strategy? When will the game-changing AI drive you out of business? That's also the question to answer. It's not matter of if it will happen, it's matter of when it will happen. So, here's the key pertinent question. How do you move your business into an AI-driven platform's disruptive future? Where to look? You have to develop the eyes for spotting the AI platform opportunity. Access to information is an important ingredient of value. The second question, where do you see in your industry, or it could be other industry that is not yours, lots of waste, lots of errors, inefficiency in the value chain that can be corrected with the use of data and insights? There's a potential opportunity there. Let's look at the third lens. Where do you see that the middlemen are creating inefficiencies or has disproportionate control over the supply side of the market? Let's look at the next one. Where in your industry the customer experience is painful, inefficient, or in need for improvement? I would encourage you to take a picture of this slide. It's about, if you don't have a platform company, if you're looking at shaping a platform company, getting in that game, these are the lenses to look from. And if you have an existing platform idea, existing platform company, I encourage you to look at your company from these lenses. So time for a quick self-reflection. Where in your business and in your industry you see access to information is power. Middleman has too much power. Because if you see this phenomenon in your business or your industry, the marketplace platforms opportunities exist. In your business or in your industry, if you see a lot of waste, errors, and inefficiency, or if you see the customer experience is painful, inefficient, in need for improvement, the SaaS platform opportunities exist there. Let's look further. So, this is a question I have for you, and this is really something that I wanted to cover. How do we at MVP support business leaders to adopt the digital transformation and platform strategy? One of the things that we do and focus on is a very clear AI-driven platform strategy. We work with founders, directors, entrepreneurs in shaping the AI-driven platform strategy, the very foundations, and what's the roadmap. What you should be doing now in 3 months' time, 6 months' time, 12 months' time, and what does next 5 years might look like. We stress test the financial opportunity for any potential platform business proposition. We work and help entrepreneurs and founders and directors in shaping the business model for an AI-driven platform. And then develop the understanding, the readiness, and a plan to execute and engage service providers, potential investors, capital raise partners, right? So this is our MVP Ventures initial, the consulting aspect that actually helps in these three elements. One of the key assets that we always, help founders, CEOs, entrepreneurs is whatever is a platform concept, the clarity, what's the 1, 2, 3, 5 years goals, customer personas, who are we going to serve? How do you design a value exchange model? What's the AI-driven platform service design? Well, how do you price them? The subscription pricing strategy, again, shaping the business model, financial modeling, and then what does a growth strategy and a market selection look like, right? So we actually do this work in developing these key assets. And ambitious, courageous, disruptive leaders who want to shape the future of your industry will explore the platform opportunity. So the key questions that we work on and I want to leave you with is, what problem will this platform solve for my business and the wider industry? How does it create value for users, for partners and wider industry and owners? What will be the potential value of the business? Like, this is an exit valuation or investment capital valuation, right? And what's the real financial opportunity? I think every founder, every shareholder, every investor should always ask this question. And then next question, what will likely be the break-even point and profitability forecast? Again, for every founder, every investment body, this is important. Whether you are doing debt funding, venture funding, bootstrapping, doesn't matter. People need to know the break, especially the platform companies where early days you're hemorrhaging money, right? And then continue to adjust and revise it, and then valuations, right? So what does it look like? Does not have to be a platform, but what is a business model? What's the financial opportunity as we transition and transform the business model? Who will be your customers? How does it create value? And what role AI will play in your revenue generation? How will business make money? What is the break-even point of those investments? And then what are the upside and downside opportunities? Upside opportunities, downside risk, with healthy valuations, not measly 1x or 1.5x, right? So we help the CEOs, founders, and a board to actually shape that future. I won't go through this. If you have more questions about what we do, how we do it, please book a meeting with myself, right? We can talk about it. You will get a chance to do so. And yeah, I will just conclude tonight.